So Bitcoin is having a green day today, up 1.5% at the time of recording this video, which suggests we could be getting a bounce after our crazy last two red days, breaking us down into a critical pattern. But I have to say, are we creating a dead cat bounce? And is there worser, more red downside days to come? Or is this the start of support? Can we now rally back on and get on with our upward journey? We're going to cover that off. We're going to look at the key levels in the chart to watch out for and what patterns are being created as we speak. We're also going to look at the macroeconomics and what is causing this, right? Like what caused the market to dump? Because not a lot of people are explaining exactly what's causing this to dump. So we're going to go through all of that clearly. So make sure you sit back, hit up the like button. Don't forget to subscribe. As always, if you like my perspectives, consider joining our course member live streams. Links in the description to head over to ijaz.uk/member, where you can join our 3 times weekly member live streams. Yes, we're going to have another one today with just our member live streams where we can discuss their portfolios, we can look at certain coins, do technical analysis, we can do fundamentals, we can look at economics, and a whole bunch more. Just sharing my perspective of what I'm seeing in the market live and in real time. So consider checking those out. But here on the Bitcoin chart, a nice green candle and well needed after 2 horrible red days. I mean, 2 days ago, we were sitting at a high of 47,200. And yesterday, we fell to a low of 43,000. That's a big drop here on Bitcoin. But it's not the drop in itself that's the worst thing. The worst thing here is we have broken down from this descending triangle pattern which we've been speaking about for the last few days here now. And the worrying thing is we're now back into our ascending triangle. Now this ascending triangle we already broke out from, we then fell back into it, and if we start to then tease to the downside of this triangle, i.e. if we start heading through 43,000 and 41,000, start heading towards the bottom of this wedge, scary targets can start to come in. And I don't want to mention them just now, but you'll be heading to the bottom of the wedge at 34, 33 territory if we were to break from this pattern, okay? But that's a long way away from happening. We need to be prepared. I have to show you what I see in the charts. That's my duty to you guys. But there's a long way to go before there. And we're getting our initial bounce from a key level now. If I head over to the 4-hourly, you will see we're getting our initial bounce from the 43,000 mark here. You can see we wicked down yesterday on a 4-hourly candle briefly to 42,700. That would have been a great opportunity if you set limit orders to pick up a little bit more Bitcoin and the relevant altcoins at those points as well. And that would have been a really nice pickup. But now you're seeing the support come in. We've had 4 4-hourly candles in a row now showing some support from that level. But the question continues to arise. Is this a dead cat bounce? Now, for those who don't know, a dead cat bounce, no animals were harmed. It's just an analogy. But in essence, if you drop a cat and it died at the bottom, it can still sometimes bounce up, right? That's where the phrase comes from. You get a bounce, which is like a convictionless rally, if you want to call it that way. It's a bounce just for the sake of it, a relief for the next phase back down to the downside because it's over, right? And that's the fear right now is this just a little bit of a relief rally? Is this just a little bit of a cooling off for the bears before they continue with their next push to the downside? So that is something we have to monitor now. And the only way we're going to understand that, not necessarily from technicals, because the technicals are showing us bullish intent, right? That's how things work. You can see the RSIs are showing us that we should be heading to the upside now. That all makes sense because the bears are exhausted. The bears have pushed us down all the way from 47,000 all the way to 42,700. They've done a pretty impressive job here, right? They want to call off before trying to push us down some more. But we have to understand what is going on with the wider market. Because the wider market today, we can see in the pre-market, we're setting ourselves up for a slightly flat to slightly moderately green day, right? Let's just call it flat. Dow Jones, 0.18%, 0.04 on the S&P, and 0.04 the other way on the NASDAQ. You've got oil tickling up a little bit. You've got the US 10-year up a tad today. And it just goes to show that the market is still tentative. 2 bad red days in a row. Now a bit of a flatter day, trying to recover some of the losses and just trying to understand what actually happened. And for those of you who haven't watched my video yesterday, what did happen? What caused this fall to the downside? Well, go and watch that video because I explain it in more depth than I do here. And it's important that you understand this because this trend is going to carry on all the way to our next FOMC meeting on the 4th of May. And what happened was 2 key Fed officials came out. And they started talking very hawkishly about inflation. In other words, they were giving clues that we could see interest rates start to increase faster and faster. Now, the other thing we saw was the Fed minutes came out. Okay, these were minutes from the previous meeting when we got the 0.25% interest rate hike. And that gave markets a little bit of spook around, again, are we going to see 0.5% interest rate hikes, because some participants in the Fed were saying that we expect to at least see 1 or 2 months with a double rate hike. So the question arises, is that going to be in May? Now, you guys know my coverage on this. The market's already priced this in. This is a bunch of nothing burger. 80% of the market has already priced in a double rate hike for the May meeting. So even if there was a double rate hike, you might have slight red, if not a little bit flat. The market's priced it in. So unless it winds that out and then gets shocked again, it's a nothing burger. Right now, as it stands, that's priced in. But what is worrying the market, and what we spoke about at depth yesterday, is the thing that people aren't talking about. It's the elephant in the room, which is the balance sheet shrinkage. Okay? Now, again, to explain this very simply, the Fed, since the pandemic, has been printing money into the economy. It's been printing money into the economy, which has been really good for growth stocks. It's been really good for tech companies. It's been easy to access funding, right? And risk has been on. Risk on means tech stocks do well, the NASDAQ does well, the S&P does well, as we've seen throughout the pandemic, and therefore Bitcoin can take advantage of that. And we saw Bitcoin doing that throughout the pandemic. But now we're rotating into a slightly risk-off environment, okay? That means that Jerome Powell is saying, I need to shrink my balance sheet. We're holding unprecedented amounts of debt on our balance sheet. We need to shrink this. And the way he does that is he takes a hoover and he starts hoovering up all this money that he's printed into the economy. Now, what effect is that going to have? That's a tightening effect, okay? Again, imagine a car which is driving along down the road and it's speeding up. It's too fast. That's inflation, right? It's overheating. So what you do is you apply the brake. That's the interest rate. Now, nobody's shocked when somebody starts braking on a motorway, right? You expect to brake. But now, imagine somebody's put some thrusters at the front, or people are pushing the car from the front to slow it down even more, right? Now, that's an extra effect, which is just jarring, and that can jar the economy. And that's what we're seeing with the balance sheet shrinking. So the way that Jerome Powell and the team does the balance sheet shrinkage is going to be critical. And we got a clue from the Fed minutes of what that is going to look like, because the Fed officials agreed on a cap. They agreed on a cap of $60 billion a month to reduce in treasuries, and $35 billion they can reduce in mortgage-backed securities. So in essence, there's a $95 billion cap. To put that into perspective, in the previous time this has been done, balance sheet shrinkage around 2017 to 2018, 2019 period, they were doing that, they were rolling that off at about $50 billion a month. This is slightly more, and this is what could affect the economy, because if Jerome Powell comes out and says, we're going to go aggressive, we're going to shrink the balance sheet really aggressively, that's what's going to affect the market. Now, overall, I'm not too concerned by this. I'm not too worried by what we're seeing. I think the market's pricing the interest rate hike, and I think the balance sheet shrinkage is starting to get accepted, and I don't think Jerome Powell's in the business after doing all this work around the tapering and the interest rate. I don't think he's just going to rug pull the market as we speak. Now, coming back to the charts, what does that mean? Are we going to start heading back up? Well, the next level of key support area for us to get to is 44.5, which is the top of our ascending triangle, this big pattern here, which is also the bottom of the descending triangle, which we broke out from. So this is going to be an important level of support and resistance. Now, if I go back a bit, you will see we got rejected 4 times from this level. Okay? 1, 2, 3, 4. On the 5th attempt, we broke out and we came straight back down. So now the question is, can we break through this at first time, get straight back into this pattern, start working ourselves back up? Or is that level going to act as resistance, and are we going to go and start creating lower lows? This is the important point now. What we need to see is above 44.5, and ideally, you want to get above this pivot point high. You really want to get back to about 47 to start feeling confident again on this move, because otherwise, you continue to be in a downtrend. This is a downward trend, right? So if we do something like this and post a lower high here and a lower low there, we continue to downward trend. So that's definitely something for us to watch out for here on Bitcoin. The other noteworthy point is that we've got the fear and greed index falling. And this is exactly what I said. It just takes a couple of $1,000s in the Bitcoin price, and fear really does start to come into the market. And again, for our course members, for us guys here in this community, what do? We know when the market is fearful, we need to be getting to work. That is why I'm looking for pullbacks. I'm looking for opportunities when Bitcoin starts to retrace closer towards 40 to pick up some more discounts on some of my favorite only high conviction altcoins. So you can see fear and greed index quickly moves to the other side. As soon as Bitcoin just drops a little bit, the market starts to get fearful. And the reality is you're still at a level of support, but the patterns do show us a certain thing. And on the 4-hourly, we are now bearish on our 4-hourly. We'll have to come across it and close above about 46,000 in order to clear that to become bullish again. If I show you the daily chart, the effect yesterday had would to basically take us from a very comfortable area of the last 2 days to all the way to the bottom of our EMA ribbon. But we're getting good support from our EMA ribbon here, and we can use this to work from. If we start closing below 43,000, then we would have flipped our EMA ribbon on the daily chart bearish, which would not be ideal at all. Now, my view on this whole thing is it's a bunch of nothing burger. I think the market's going to take it into its stride, and it's not going to have too many concerns. If there's a 50 basis point interest rate hike, the market's going to be slightly red / sideways. It's not bothered. It's priced it in. If there's a 25% basis point, which I actually think is what's going to happen, I think it's just going to be a 25 basis point. I think there could be a 50 basis point at some point in the year, maybe twice in the year. But I think the next one's going to be another 25 basis point hike. I think the market can start rallying in that case because it's already started to fall on the view of what's going to happen is being worse than 25 basis points. So if it's 25 basis points, it should rally. So that's an interesting thing that I'm seeing in the market. The market is also waiting today to receive the jobless claims. We know that's coming. We've also got the tensions around Ukraine. That doesn't seem to be settling. Ukraine are asking NATO to provide it more weapons. Putin is preparing an Eastern offensive. And the rhetoric is that Ukraine are asking for the equipment they need for a long-term solution. That was the wording. So that's going to spook markets a little bit because they want this to be resolved quickly, right? In a matter of weeks, if not months. But long-term solutions mean you could really start to get dragged into a long, multi-month, yearly kind of conflict, which is not great for the market, not great for long-term commodity prices and inflation, and therefore investing as a whole. So definitely that is what we're looking for. The question now we need to be careful of is make sure we do not get caught in a dead cat bounce. So do not be one of these that start chasing the green candles. You guys know that is a message I continue to scream from the top of my lungs is we do not chase these green candles. You just let this play out. If we start posting highs back above this kind of a level at 46.5, 47, we can start invalidating this downward trend and start trading sideways, or then trying to set up our move to break through 48,000 and start heading back to the upside. But first, we need to stop the bleeding. And the bleeding was at 43. We've got a little bit of buying pressure coming in here. The volumes aren't the best here, and this is what gets you worried, right? If you look at these candles specifically on the green candles, the volume is not anywhere similar to the red candles, which were tanking it to the downside. We need to keep an eye just to make sure we don't see this as a bearish continuation pattern, which is where the bears pushed. You have a brief rally and a dead cat bounce taking you more to the downside. So that is what I'm looking for. If we do have that, if you're looking to add more to your position, you could be setting all your limit orders ready to ladder in on your favorite buys, not just on Bitcoin, but all the altcoins will move in a similar fashion, right? So as Bitcoin is relief rallying 1.3%, you can see a whole bunch of altcoins up right now. You've got Ethereum up 2.6%, you've got Atom, Cosmos up 2.2%, you've got Cardano up 3%, Phantoms up 4%, which we'll cover on later in the day as always, Algorand up 3.5%, even ApeCoin up 4%, right? So the market, as Bitcoin starts to head up, they're all kind of recovering a little bit after a horrible 2 days, but we need to keep an eye out for this dead cat bounce. So there you have it, guys. Hope you guys enjoy this blend between technicals and fundamentals. That's what we're committed to doing on this channel here, guys. I want to show you the technicals. I want to show you the chart patterns, but I need to be able to marry those up with what's going on in the market. It's all well and good me showing you an ascending triangle, a descending triangle. Oh, look, it's the EMA ribbon. But we need to tie that on in what's going on in the market. And right now, we can understand what's going on in the market. The market was doing okay, but it got a bit spooked by two dovish Fed members coming out a couple of days ago and giving hawkish statements. We then had the Fed minutes coming out saying we expect a bit more of an aggressive stance. The tonality in the Fed minutes was a bit more hawkish, and the market is just trying to price that in and get a little bit spooked. But in the end of things, a bunch of nothing burger. We're probably going to get another interest rate hike. Well, we will get 0.25% interest rate hike. If we get a double one, the market's already priced it in. What can fear the market is a rapid, aggressive balance sheet reduction, but I don't think that's what's going to happen. I don't think Jerome Powell's come all this way being patient to suddenly rug pull the market at the 11th hour. There you go, guys. Hope you enjoyed this video. Smash up the likes and subscribe if you like my perspective. Don't forget to check out our course member live streams, ijaz.uk/member. You'll get access to me 3 times week live streams to answer any crypto and investment questions you have on your mind in that exact moment. As always, what I'm going to do is at the end of this video, I'm going to link up the video to yesterday when I explain exactly what is going on behind the market. So go check out the video. Let me know what you think in the comments, and I'll see you in the next one.